Welcome to Factful Finance, where we uncover the truths that can make or break your financial future. Now, imagine this. You've spent decades building your home, pouring your heart and hard-earned money into it. But one decision, equity release, could put all that work in jeopardy. Not just your home, but your benefits, your tax situation, and your long-term finances. Sounds dramatic, doesn't it? But trust me, it's far too real for many homeowners today. In this deep dive, we're going to expose exactly how equity release affects your benefits, your taxes, and your future financial security. Spoiler alert, it's not as straightforward as you might think. So, before you even consider this option, stick around and get the full picture. This content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. Let's start with the basics. Equity release is essentially the process of unlocking the value tied up in your home, often by way of a loan, that gets repaid when you either pass away or move into long-term care. Sounds simple enough, right? But it's the fine print where things get tricky. The first big concern we need to address: benefits and how they're impacted. Equity release, while helping you access cash in your later years, can have a direct impact on any benefits you're receiving. For many retirees, benefits like pension credits, council tax reduction, and housing benefits are critical to making ends meet. But when you release equity, that money becomes part of your assets. And here's the kicker: if your savings cross a certain threshold, you could find yourself losing eligibility for some of these benefits. Take Amelia, for example. She's 67, living in a house worth £350,000, and she's been relying on pension credits and council tax reduction to make ends meet. When she decided to release £40,000 from her home, her overall savings were now over the limit set by the government. As a result, she lost access to some of her benefits, making her financial situation a lot more difficult than before. This is something many people overlook. It's easy to get excited about the lump sum you could access now, but it's crucial to ask, what's the long-term cost? Next, we need to talk taxation. Equity release isn't tax-free. That lump sum you get from unlocking your home's equity is treated as a loan, not income, so you won't be taxed on it directly. However, once it's in your hands, it can still impact your long-term tax situation. If the loan interest compounds, as most equity release plans do, it means the amount you owe grows over time. Let's break that down. Say you release £50,000 from your home at an interest rate of 5%. After 5 years, you'll owe £64,000, assuming no repayments are made. The problem here is that when you pass away, or if you need to sell the house to pay off the loan, the interest that's built up can reduce the amount your beneficiaries inherit. This is crucial, especially if you have children or loved ones who expect to inherit your home. Additionally, any shach income generated from that lump sum, for example, if you use it to invest in stocks, bonds, or other assets, could be taxable. So what appears as a straightforward financial decision can quickly turn into a long-term tax headache, especially if the debt compounds faster than your investments are growing. Now let's zoom out and look at the bigger picture. Equity release doesn't just impact your immediate finances. It can significantly alter your long-term financial trajectory. If you don't account for how the interest on the loan accumulates, you could be eating away at your wealth in ways you didn't expect. What happens when the money you've released isn't enough to cover future medical expenses, long-term care, or the rising cost of living? Take Henry, another case study. Henry, in his late 70s, released £30,000 from his home to pay off some debts and renovate his house. The problem? He didn't consider the impact of long-term care costs. By the time he was in his 80s and needed assisted living, the equity in his home had been largely consumed by interest and repayments. In the end, he was left with little to cover his care, and his family had to step in to cover the rest. This is why, before considering equity release, you should take a comprehensive look at your long-term needs, beyond just the immediate cash injection. Ask yourself, will this loan put me in a better position down the road, or will it put me and my loved ones at greater financial risk? Now, I know some of you might be thinking, but can't I just get advice on how to manage the loan properly? The answer is yes, but it's critical to work with a professional who understands the ins and outs of this complex product. Equity release is a specialized field, and the wrong decision could mean long-term financial hardship. And don't forget the impact on your estate. Remember, once you release equity, you're essentially taking out a loan against your property. This means that when the time comes for your beneficiaries to inherit your home, they'll need to pay off that debt, potentially leaving them with little to inherit, or even forcing them to sell the property to settle the loan. Let's recap the key things you need to keep in mind when thinking about equity release. 1. Benefit reduction. If your savings exceed certain limits, you could lose out on essential benefits. 2. Tax implications. The loan and its accrued interest can affect your tax situation in the long term. 3. Depletion of assets. Over time, the compounded interest can significantly reduce the wealth you pass on to your family. 4. Professional advice. Always consult with a financial professional to ensure you're fully aware of all the implications before proceeding. As we continue this series, remember that equity release isn't a one-size-fits-all solution. It's a major decision that requires careful thought, planning, and understanding of the far-reaching impacts. If you found today's breakdown helpful, then trust me, you won't want to miss the next video. We're diving even deeper into how equity release can affect your inheritance and the hidden fees that could surprise you. So don't wait, hit subscribe now and keep protecting your financial future.